Hi, I'm Candace Schultz, and I'm a financial planner here at Aspen Wealth Management. I get questions all the time about mortgages and buying a home, so I thought we would sit down today with Matt Pruitt from Sendera Funding and pick his brain. So Matt, what are the best practices to increase my credit score?
I have this conversation more than any other in my career. How to increase and maintain a great credit score. And it's a tricky subject because there are a lot of levers, a lot of factors, a lot of models, a lot of algorithms that go into getting and keeping a good credit score. To keep it simple, nothing affects credit more dynamically, whether it's good or bad, than credit cards do, okay? More so than installment loans, more so than other loan types. Revolving lines of credit, which is a fancy way of saying credit cards, have the greatest impact on your credit score. So, best practices with credit cards is pretty simple. You don't want to use much of your total available balance if possible, and you want to pay that sucker off on a monthly basis, okay? The magic number according to FICO, now this might sound a little depressing, so just bear with me. The magic number according to FICO is 7%. You want to use about 7% of your total available credit line to get the maximum bang for your buck on enhancing your credit score using credit cards, okay? Nobody really does that. Nobody keeps their usage under 7%, but you really want to keep it under 50, okay? Once you get around 50, it becomes sort of a wash. It's not helping you, it's not hurting you. Once you get much above 50, it's actually detrimental for your score month over month. So if you're carrying a balance month to month, stop doing that if possible. Best case scenario is you use 7% of your total available balance and pay it off every month. And then it's not the end of the world if you go up to about half, okay? So that's best practices with a credit card. Now here's the game. If you say, but look, Matt, I want to be a superhero. I don't want to use more than 7% of my total available credit line every month. I want to do it the very best way possible. Then here is a way to go about that, a strategy, if you will, a little bit of a game plan. You want to call each one of your credit cards every 6 months, okay? Preferably you've got 3 of them and they're really old. That's best case scenario. You want to call each one of your credit cards every 6 months and they're going to say, hey, Ms. Schultz, what can we do for you? And you're going to say, I would like to get a credit line increase. And they're going to ask you a few questions. Why do you want a credit line increase? Answer is because I'm looking to build my credit. You don't have to make anything up. You don't have to say you're going to buy a Kawasaki dirt bike or anything. Second question, they're going to say, how much money do you make a year? You answer that. They're going to ask you how much your housing expense is. You answer that. The greater the disparity between how much money you make and how little in rent you pay, the more likely it is that you're going to get your credit enhancement request granted, okay? Finally, they're going to ask you how much you would like to have your credit line increased to, right? So that's sort of up to you. I would recommend being aggressive, reach for the stars, land on the moon kind of thing. And you're not, keep in mind, you are not increasing this credit line so that you can use this much credit. You're only increasing it so that you can use a larger dollar amount and stay under those friendly credit benefiting thresholds, 7%, 50%, right? So you do that every 6 months until you get to your magic number, whatever that may be. If it's $20,000 per card for your total available limit, then 7% is $1,400 a month, right? 50% is $10,000 a month, right? The other most important driver of credit score, in addition to how revolving lines of credit are treated, aka credit cards, is the age of your total credit profile. The older your credit, the higher your scores. As long, all other variables being equal, everything's paid on time, same dollar amounts and all the above. If you've got one credit profile that's a year old and one that's 20-year-old, the 20-year-old credit score will be much higher. Another important, crucial, probably the most important thing for you to keep in mind in maintaining a good, healthy credit score is to pay your bills, okay? Pay your bills, pay them in full, pay them on time, pay them early. Having late payments on your credit report is extraordinarily detrimental, and it can stay there for a very long time. Then you have to get into credit repair and get with experts and professionals to try to work your way around these issues. Best thing to do is avoid them up front if possible. So these are good, beneficial rules of thumb and strategy for you to build and maintain a great credit score.